think the immediate change is, I think, the view of sterling, which had already started to shift in the last month or so. You saw a definite reaction and change in the tone of the sterling market. A lot of short covering, a lot of people who were bearish on sterling covering those positions. So I think there is a general feeling that the election, assuming it goes according to plan, will probably reinforce a stronger sterling. So I think that's been the immediate consequence of the announcement that we saw yesterday.
Yeah, that rise in sterling is predicated largely on the assumption that the UK will now get a softer Brexit because Theresa May will be less cowed by hardline Brexiteer MPs. Is the market misreading that or getting too carried away with that?
I've heard both lines of argument on that. There's one that she will be less cowed by the hardliners. There's the other side which is arguing quite the opposite, that in fact this will allow her to have a hardline view and not have to pander to maintain her majority. So I think you could argue it either way. I think the reality is Theresa May steers her own ship, and in doing that, she will carry on down the path that she is already on. And I think she genuinely believes, I think, that she can negotiate a good deal for the UK, the best deal that she can, and it will be as hard or as soft as is feasible to achieve.
Now, clearly that rise in sterling has also hit the value of these big multinationals, of which there are plenty in the FTSE 100 who derive a lot of their earnings from overseas. How unhelpful is that for equity investors?
Well, it's one of those interesting things about the UK market that the big listed companies, the FTSE 100 companies, are of course predominantly overseas earners. So peculiarly, a weak sterling is very good for them because they translate a lot of overseas earnings back to the UK. So you always see as sterling strengthens, you tend to see that the stock market sells off and vice versa. I think for most of the listed sectors in the UK, actually they're not domestically oriented. So the immediate UK political environment doesn't make very much difference to them, other than perhaps headline rates of taxation, but at the margin, really most of their earnings and taxation is from overseas. So it hasn't really got a direct impact, certainly in the short term.
John McDonnell, the Shadow Chancellor, accused Mrs May of going to the country this morning because the rise in inflation is eating into disposable incomes. Potentially consumer spending is going to slow down quite sharply, and with it the economy as a whole. Has he got a point there?
I think there is a risk of that. I think we have seen inflation tick up, and you've seen some of the public sector pay rises that have been mooted so far this year haven't kept pace with that inflation. So that does suggest there could be, in some sectors, a real income squeeze. So you could make the case that there is a little bit of political expediency in going early before that economic bite hits people's sentiment. And at the moment, obviously, the Conservative Party is riding very high in the polls. So there's a lot of political expediency about that. But actually, I don't think that is the real reason. It certainly seems to me it's much more to do with the timing of the Brexit negotiations and not wanting the potential distraction of being in quite a sensitive and difficult transition period at the same time as you're trying to run a general election campaign, which would be the case if she didn't go early now. So, I think it's probably much more about the timing of that than it is about this potential squeeze we might see in the short term on real incomes.
Now, investors like you have an awful lot of geopolitical issues with which to grapple right now. North Korea, Syria, the possibility of a far left or far right president of France being elected. Where does the UK election sit in that list of concerns?
The UK election actually, I think, fits quite low down on that list because there's so much going on in the political sphere. There are so many curveballs coming out of left field that markets are, in a way, becoming quite immune. The reaction periods are very, very short now to new events that are coming out. So I think short of a very major surprise, like a major conflagration in North Korea or something particularly unexpected coming out of the French, particularly the first round of the French presidential elections this coming weekend, I think actually markets are tending to shrug off some of these political factors. And in the grand scheme of things, when you look at where the UK fits and all of that, frankly, markets don't think it's very important. It's quite far down the list.